Do you want to understand your financial reports and understand the story that they tell about your organisation? Well, you're in the right place. Community Compass builds the capacity of organisations through sound financial management practice. Your financial reports are the detailed outcome of all of the activities and transactions that have occurred for your organisation over a given period of time, whether that's a month, a quarter or a year. As a committee or a board member, your financial report should be presented at the meeting for discussion, review and acceptance. Let's take a look at some of those reports in some more detail. Firstly, let's look at the profit and loss report. This report is also known as the performance report, as it captures the activities of your service delivery. For example, the amount of income you have received and the costs that you've incurred over a given period. Taking a closer look, you will see that the income is broken down into headings such as grant income, rental income, hall hire, fees for service, and perhaps some interest. Take a moment to think about the income streams of your organisation. What activities do you do that generate income? Now let's look at the expenses. These represent the costs you have incurred to bring your activities to fruition, such as marketing, advertising, accounting and record keeping, auditing, insurance, rent, salaries and wages, training. What kind of expenses do you incur? Take a moment to reflect on these for your organisation. Some of the questions you may want to think about. What is your largest cost area? We can graphically report your income and expenses to highlight your high income and expense areas, which will give you a greater visual of your financial information, creating more meaningful reports for review and discussion at your next meeting. The last element that is important when reviewing your profit and loss report is the surplus or deficit area. Surplus means that you've earned more than you've spent, and a deficit means you've spent more than you've earned. Another important report to present at the meeting is the balance sheet, also known as the financial position statement. This report is a reflection of the activities that have happened in your organisation, showing such things as your bank account, stock on hand, prepayments, debtors, and the things you own, known as your organisation's assets. We also have non-current assets, which are items that will provide a benefit to your service for a period greater than 12 months. Things like your computer, your equipment, motor vehicles, buildings. These items owned by your organisation are listed as non-current assets. Next, we will look at the liabilities, which are the items we owe out, such as bills unpaid are our creditors, GST and PAYG tax that we need to pay to the ATO, and loans and grants in advance. Grants in advance are shown on the balance sheet due to the fact that at any given point in time, if the organisation doesn't perform the tasks or outcomes required by your funder, or you close down, then the funds unallocated will need to be returned or paid back to your department who funded you. For example, if you receive $30,000 worth of funds to run a project over a 3-month period, then $10,000 would be allocated for each month as grant income in the profit and loss report across January, February and March, so that you are showing the income received to run the project in the months that it is being spent or when the activity is occurring. The third element of the balance sheet is the equity or the net worth of your organisation. We have assets minus liabilities, which equals your net worth, which is a summary of what you own less what you owe, which equals your net worth or your value of the service at any given point in time. A quick overview of the balance sheet are looking at things like your bank, which is the inflow and outflow of cash into and out of your service. Prepayments are items such as insurance, which is a cost that provides a benefit to your service over the whole year. So it's broken down into monthly amounts and allocated via a journal to your profit and loss report on a monthly basis. This amount represents the cost used up in that month. This is known as accrual accounting, which is a whole other topic. We will be creating a learning resource for this topic in the near future. Debtors are people who owe you money for services that you've provided. For example, a preschool provides educational care on a daily basis, but the fees that are paid are only paid perhaps weekly or monthly. Non-current assets are items that give a benefit to the organisation greater than a 12-month period. And liabilities, such as creditors, are people that we owe money to. And there's grants in advance, which are funds we receive in advance to allocate to a project. You will note that the net equity is made up of accumulated funds, representing your previous year's profits. Adding your surplus or deficit from this year's activities, also found on the bottom of your profit and loss report as your surplus or deficit. This then creates your this year's accumulated funds. The third important report that is good to review is a cash flow statement. This represents the inflows and outflows of cash into and out of your organisation, which is the actual money that transacts between the parties during the period. In closing, I hope that this video has been able to shine some light to your understanding of your financial reports. Next time you watch this link, you may wish to have a copy of your own financial reports to reflect on as you step through the process. Wishing you well with your projects.